Hello traders, Cousin Vinny coming to you from theclosingprint.com, May the 10th, 2020. In this edition of your weekend video newsletter, we'll discuss the indices, all of which moved higher, with the Nasdaq and big cap tech names leading the way, with the Nasdaq Composite only 7% off of all-time highs at the present time. While most everyone is worried about their health and financial impacts of the coronavirus, the market continues to look forward. And as the great Jesse Livermore used to say, there's nothing new in the market. The market always looks forward. It always has and always will. As trend followers, we want to turn off the news. We just follow what the market is telling us. What dealers, market makers, and institutions are doing is what we should focus on. We are now 37% up from the lows and only 7% from all-time highs. With the market up over 6% in 5 trading days, a pause or some give back would be healthy and normal, though we are looking for the 3,000 level as resistance at the 200-day moving average for the S&P 500, 300 for the Spyders, and 290 and 2,900 for support for both the SPY and the S&P 500 respectively. The bond stock ratio, HYG and junk, made a bullish turn last week. We have the Dow Composite bullish Friday, moving back above its 21-day and 50-day moving averages. The S&P 1500 is on a bullish cross and buy signal. XII, the Arca Institutional Index, is bullish and above the 200-day moving average. In addition, sentiment as measured by TIC for the NYSE and TIC-Q for the Nasdaq both turned higher and continues to trend on a bullish signal. NYMO and NAMO are slightly neutral. They are showing signs of a peak, but NYSE and NASI for the New York Stock Exchange and the Nasdaq respectively continue to move higher. No signs of a peak just yet. The US dollar has been drifting lower in its recent range. The US dollar-yen pair also in a tight range that is showing signs of fading. And the British pound US dollar is range bound at the 21-day moving average for the last 4 weeks. AGG, TLT, the bonds did dip last week. The short end of the curve, IEF, the 10-year, 7-10-year, and SHY, the 3-year, showing relative strength on the short end, moving a bit higher. The 10-year yield is still at extreme lows, but turning higher. Gold's in a tight range. It's back to the breakout zone over the last few weeks. That's tightening up a bit. Copper is rising. It made a new higher high last week and a higher low. And West Texas crude is up over 302% off of that low we saw 3 weeks ago. Spyder Sectors, the heat map has been fading as prices rise, while the international markets have been fading with a little bit more oranges and reds. Bukowski showing 3 of 5 green with his CPI signal mixed since May the 8th, moving from 5.4% to 88% in a week's time. That's bullish with 3 bearish patterns, 48 bullish patterns, and 510 patterns waiting for breakout. It's this last number that has the capacity to continue moving the markets higher as we shift to more patterns ready to break out. If we look at the Nasdaq Composite, back on February 24th, we dropped below the 21-day and the 50-day moving averages. And had you heeded that signal, as we had mentioned back at that time, and started hedging your positions, as we did, you would have missed more than 25% of this drawdown. Eventually, we bounced at the 200-day moving average, rebounded, got rejected near the 21-day, and then fell again. The point to make at this juncture is that the 21-day has crossed back up through the 50-day and the 200-day moving average, and the 50-day is starting to turn back up as well. We also show remarkable strength in the XII. This is the Arca Institutional Index, the 75 stocks most commonly held in institutions' core portfolios. Everything looks bullish here. We've got tight Bollinger Bands as we began this sideways price action, consolidating above and below the 200-day moving average, finishing off the week on a high note in the upper half of its daily range at the upper bands, looking for more upside, while reflecting on the fact that these stocks that comprise those institutions' core portfolios have been showing remarkable strength. We also reflected on the S&P 500 equal weight index, where no stock is more important than any other. As price action hit the 21-day and reversed, we do have a potential to move back up to the 618 Fibonacci. And for CCI and the number of stocks moving above their 50-period moving average to continue climbing before being overbought. Once we hit the red zone between 80 and 90%, we start to look for potential pullbacks. This would indicate we might see the 300 level on Spyders in the short term before consolidating. The S&P 500 Spyders also finished the week on a bullish note in the upper half of its daily range, above the 9 EMA, 21-day, 50-day moving averages. Seeking a retest of the 200-day moving average in the short term is what we are planning on. RSI is strong and rising, and we do have MACD above its signal line and moving higher. We also note that positive gamma is moderate, which should lead to smaller market moves as VIX continues to pull in. Zero gamma is at 2871. The top gamma strike aligns with the 200-day moving average at 3000. And if we look at the Spyders, we have the same information. 287 is the zero gamma level with the top gamma strike at 295, right around where we closed, just shy of 295, with a potential for a move up to the 200-day moving average at 300. While the S&P 1500, a broad measure of market participation, the S&P 500, mid-cap 400, small-cap 600, has given us a moderate crossover, as we can see in the thumbnail, moving higher with histogram above the zero line. We are looking for a follow-through on these 1500 stocks. As we see the same information, the advancing declining percent, high-low percent, continues to favor a bullish move. We could pull back to the 21-day moving average just below the red line. However, if we do see the bands open up top and bottom, it typically tells us to look for a fast move as volatility is starting to open up on this index. So we do see potential for a follow-through this week, barring any unforeseen catalyst that might appear on Monday or Tuesday. Looking at these 1500 stocks through a different lens, we are looking at the S&P 500 in the upper panel, and the lower panels are all advanced decline percent for the S&P 500, mid caps, small caps, and the Nasdaq 100 in the lower panel. Significant here in that we came all the way back to the zero line. We were looking for higher lows. We got that as a confirming signal. This looks bullish. We look for a push back through the 30% level, the red line up above. On all of these indicators, reflecting on the Nasdaq, which is already at that level. So we could see a little pullback on the big cap tech names that outperformed last week. Short term, that would be normal as we plan for consolidation and higher prices in the weeks to come. We also see that in the Nasdaq Mcclellan Oscillator, a breadth indicator which has started to turn. The black line is what I'm watching. It's above the zero line. I'm looking at the shaded area in the background. We do have NASI, the summation index of all of the 2,000 plus stocks that trade on the Nasdaq, moving higher. So this is pointing to a potential. Be open to the idea that we could see follow through, even though breadth is starting to wane just a little bit. We've had previous occasions where that's happened and the markets didn't turn over immediately, as this is somewhat of a lagging indicator. This is also echoed in the New York Stock Exchange Mcclellan Oscillator. There's 2,900 plus stocks that trade on the exchange that comprise the NYMO. We're seeing a peak here. The background is the actual values. This is a moving average I put overlaid, and the summation index following through, and more bullish at the present time. Small caps also had a decent week. We were looking for a move above this pivot from back in 2018, the December low, as we reversed and moved back up to the 50-period moving average, the green line on the weekly. This past week we pushed through that level and are testing that previous week's high with the overhead moving averages as potential resistance. RSI continues to move off of oversold conditions that we were looking at last week for a potential follow-through. We got that on above average volume. MACD is about to cross, so maybe favor these this week. If you're considering swing trades, most of these are small cap technology, small cap oil and gas, and small cap biotech stocks, filling out the Russell 2000 small cap index. The Dow Composite is also bullish, following through above its 9 and 21-day moving averages. The 50-day is the orange-colored line. We're looking for a push back above the 8,071 level and then a move back to the 200-period moving average overhead, just shy of 8,800. RSI is above 50 and rising. Volume's been increasing. MACD's turned back up, and stochastic is oversold and moving back through the 50 zone over the last week. The importance of this particular index is that it reflects Dow theory. It's 65 stocks in the industrials, transports, and utility sectors. Despite the pullback in utilities, industrials, and transports continue to outperform. VIX is also starting off the week with a green signal. This is taking the VIX and flipping it on its head so that it aligns with price action. When this is green, we look for higher highs and higher lows, finishing the week just shy of 2930. As VIX prints a gravestone doji on the daily time frame. We're looking for more downside, get back to more normalized price action. VIX will continue to unwind. That'll force dealers, market makers, and institutions to cover any short put positions, among other things, as traders continue to lose premium value as volatility collapses last week. So we're anticipating the S&P 500 will have 2,900 as support and will grind higher this week, testing the 200-period overhead over the next few trading days. As RSI suggests, there is more upside potential with MACD turned back up and above its signal line. The bond stock ratio is dropping, which is telling you to favor equities over bonds as the red line continues to drop back towards a normal level on this weekly time frame, and the S&P 500 continues to climb. Being reflected in the TLT 20-year bond weekly chart as we pull back, producing lower highs. We're testing the moving average. Any move to the downside would continue to show the ratio dropping and equities confirmed as being favored in the short term. The 10-year yield has yet to follow through off of these lows. We've been anticipating that might happen. We're watching momentum indicators as they turn as well. So if we get the 10-year yield to move higher, that would be bullish for equities in the short term going into the summer. In addition, we'd like to see HYG and junk bonds moving higher as we saw last week. This is a risk-on indicator. This further confirms our bullish thesis for equities. If this continues to move higher off of this volume by price support zone and test the 65-period moving average on the weekly overhead, as RSI rises, that would be bullish for equities and a confirmation. A rejection here and a lower high would be the opposite and bearish in the short term. Over the last few weeks, we talked about the normalization of currency pairs. This is the British pound US dollar. The range has tightened markedly. We're watching RSI as it oscillates above and below 50, and price action stays right along the 21-day moving average. As long as this stays below the 21-day and starts to drift lower, that would be bullish for the FTSE and the London Stock Exchange. At the same time, the US dollar Japanese yen pair continues to fade. We'd like to see this moving a bit higher to help confirm equities, while we watch for commodities to consolidate like gold, which has spent the past 4 weeks above its breakout zone, a descending triangle of sorts, which is a bearish pattern. If we start to see RSI start to fall as a function of price, we'd expect to see a retest of the 50-period moving average, the green line, and potentially a pullback. Conversely, we could see inflation pick up and gold start to move higher. So keep your ears peeled for inflation is rising. That would help with your gold trade as well. While the US dollar is going through its range-bound contraction, copper has been going about its merry way, producing a new higher high and higher low last week on decent volume. MACD's above its signal line and rising. This is bullish for construction-related industry groups like home builders, building products groups, etc. So if you're trading any of those stocks, you want to see copper continue to move higher with resistance right overhead at $2.48. And finally, there is crude oil, West Texas crude, in this case, weekly time frame. Early in the week, you might have heard the comments from Putin and Saudi Arabia about coming to some sort of agreement. We had a 300% move in crude oil, West Texas, potential overhead resistance now at 382 Fibonacci. These high $30, low $40 a barrel levels, with MACD turning, stochastic oversold, and rising as well. The sector heat map, updated as of Friday's close each week, has moved from chartreuse green 5 weeks ago to lime greens, yellows, and a few assorted reds here and there. Consumer staples pulling back. Broker-dealers, some financials have pulled back as well, while we do see strength in media, retail, oil and gas, equipment, energy names, in addition to small-cap biotechs, large-cap biotechs, technology, internet, semiconductors, among others, in addition to strength we saw in telecom services last week. The international indices, by comparison, have also shown a few more oranges and reds, with the South American countries faring the best, with the Asian markets pulling back last week. Individual sectors, as we mentioned previously, transports moving back above the 20 and 50-day moving averages. Real estate, we got some names on the IBD 50 that are showing relative strength. Energy looking like it's going to break out 20 and 50-day cross. We got communications, that's Netflix, Facebook, Disney, streaming like Roku and others, pushing this particular sector higher. Following through, we have technology doing well. Consumer discretionary, which you want to see if you're bullish the markets, you want to see consumer discretionary continue to move higher. We might see stores opening, as Apple had indicated on Friday. Tim Cook talking about opening some of their individual stores, not the mall stores particularly, but the individual stores. That's a sign that the markets saw some improvement. As is the case, we did see some of these consumer discretionary stocks moving higher. Healthcare is also doing well, as are the other sectors with the exception of utilities, which moved a bit lower. We're starting to see some improvement in financials, and industrials are also above the 20 and 50-day to start the week. Here is the IBD 50 for the week. We're looking for price action to be close to the 20 and 50-day, having potentially just touched the 21-day moving average like we're seeing with Anthem Health. AMD is doing well, as we saw last week, following through. It's at the 21-day moving average, above the 9 EMA. Bullish look to it on Friday. We're looking for this to follow through, If we can get through 53.51, we'd like to see a test of 58 in the short term. As many semiconductor stocks looked very strong last week on Friday, Anthem looking for follow through right along the 200-day moving average. If we can get a bullish candle on Monday, that would be potential for a follow through. We're looking for a volume to increase and MACD to turn higher, showing bulls continue to remain in control. We'd use a stop below the 200-day, looking for bullish candles Monday and Tuesday. Applied Materials also showing potential for a push above the 200-day. RSI suggests there's more upside, and if this continues to rise as a function of price, volume indicating institutions have been active, that this might continue into this week. And if it did make it through 54, 55 or so, I look for a test of 56 and then 61 over the next few days. Boxes following through, nice bullish pattern rising along the 9 and 21 day. RSI suggests further upside, and volume indicating institutions have been picking up shares on Thursday and Friday. MACD is above its signal line and rising. This, of course, came with the recent report, box indicating a 14% year-over-year increase, and delivers its first full year of non-GAAP profitability. As previously mentioned, a lot of the Reits are looking pretty strong. Here's CareTrust REIT. Nice look to it, pushing off the 21-day moving average. You can see the wave up has started. Look for a bullish candle. You might be able to get 2 or 3 points out of this one this week. While Chegg, CHGG, reported on Tuesday, Gap and Go. Looks like this one's going to haul butt higher. This is a purveyor of printed and electronic materials for students from all grade levels through college. Volume indicated institutions have been picking up shares. Looks pretty strong. MACD is above its signal line and rising. Looking for a bullish follow through on Monday. Doesn't look like this is going to pull back in the short term, even though RSI is showing muscle and potential for a very strong trend to be persistent and follow through this week. Copart, you already know that this stock we've traded many times in the past. It refurbishes and restores damaged vehicles from flood, fire, whatever, to help insurance companies recoup their losses. Looking very bullish on this next wave up at the 200-day, looking for a follow-through. Potential for this to get back to 104, 105 over the next several weeks, so we'll see some more of these types of waves up and waves down to the rising 90 MA. Very bullish 21-day, RSI is rising. Volume indicating institutions have been picking up shares, and MACD above its signal line and rising. All of the necessary criteria for us to look for a swing in stocks like CPRT. Dexcom from previous watch lists, this one just continues to move higher. Not interested in trading it unless it pulls back to the 90 MA or flags at some point. Volume indicating institutions have been picking up shares on Thursday and Friday. Big increase over the last 2 trading days. MACD is above its signal line and rising. In addition, the slope of the EMAs is very pronounced, telling you that the follow-through is most likely going to continue in the days and weeks to come. Facebook had a decent week. It had shown these little tiny candles. Many of the big cap tech names showed them as well. While we day traded Apple on Friday, late in the day, Tim Cook talking about opening stores forced a lot of traders to cover their shorts. We could see Apple getting back to the 320, 330 zone in the short term. RSI suggests there could be more upside. We're looking for follow through as volume indicates institutions have been picking up shares all week with MACD above its signal line and rising. I'd like a little dip first thing in the morning. A move back above VWAP on the 5-minute time frame might be an entry for some options. We'll look for those to show up after 10, 10:15 as we always do, and we'll keep you apprised of that if you're listening to us live. Fortinet, very nice follow through, gap and go. Looking like this one's going to continue higher. RSI is overbought. I'd like to see a little flag first, potentially. Volume indicating institutions falling all over themselves buying shares. A lot of times you'll see these gap and goes just keep going. As institutions pick up shares, they like what they heard in their earnings call, and they don't mind buying as price action rises. Same thing goes for GoDaddy, hosting provider services. Hit the 21-day. I love this kind of setup. When you got the 9 EMA above the 21-day, price action right at the 200-day, RSI is rising above 50, MACD's above its signal line, and volume indicating institutions have been picking up shares. Love this kind of setup. Stocks that move above the 9 and 21-day and then blast through the 200-day. In the short term, this one looks like it's going to continue higher this week. GSX, I flagged this one in the opening monologue because Andrew over at Citron mentioned that he thought that some of these stocks would probably see more fraud reported. That was telling me that more than likely Andrew was over hedged in this particular GSX position as it rose on Thursday and Friday. Volume increasing, saying that shorts are covering and institutions have been buying. MACD's above the signal line and rising, RSI's rising above 50. Another REIT, Highwood Properties. This one looks like it's going to continue higher. Wave down, wave up, wave down. Looks like the next wave up could get us back to 40. Maybe it's a quick trade for a few hundred shares and look for a follow through. CLAC, another semiconductor that looks very strong, looking for a follow through on this wave up. Probably going to run into resistance around 177. So you've got approximately 5 to 6 points in this one. Maybe you see a follow through this week. If it does, look for price action to get above VWAP first thing in the morning and ride that A wave up and look for B, C, and D towards the end of the day if you're thinking about swinging it. Kirkland Lake Gold, we thought gold might move off of that breakout zone last week. We're looking for Kirkland Lake to do something. It's been consolidating for 2 weeks along the 200-day. We got the 21-day rising up through the 200-day, so maybe something happens with gold stocks this week. Keep an eye on this one. Another REIT. You might see a pattern here. REITs are doing well. Medical Properties Trust, looking for a follow-through. Nice wave up. More than likely going to see that 19 level, the 200-day moving average in the short term. RSI suggests we could see a test of that, maybe even a follow-through, a point or so above that level before retreating, as momentum continues to be with the bulls. And volume suggests institutions have been active. MACD's above the signal line and rising. Mercury Systems, next wave up. Maybe it tests these third ATR bands and this previous pivot high. RSI is above its signal line and rising as well. Netflix, watching this one this week. Maybe we'll get a little follow through. I think the down day was due to Roku earnings call. Not sure what that meant, but looking for a bounce off the 90 MA. If it does test it, maybe a retracement and a follow through. Maybe a good setup on the pullback for options. While we wait for additional semiconductor stocks like Nvidia to take off to the upside, while we wait for it to report earnings on May 21st, we could see a earnings run between now and then. I don't particularly care for taking an earnings trade per se when a stock is trading at perfection near all-time highs. No idea what's going to happen with Nvidia. I'm not really much on betting. Occasionally I'll take a stock, maybe do a strangle or some sort of bet on earnings one way or another. Nvidia out with earnings on May 21st after the close. Regeneron had a nice gain over the last 8 weeks or so. We consolidated above the 21-day 9 EMA. I'm looking for this next wave up to push it through 600. As RSI indicates, there is still lots of bullish momentum. MACD is trying to turn back up in volume, sort of tapering off last week on these dojis. So that's actually a good thing. Looking for volume to pick up and price action and R-ball to pick up as a confirmation signal if you're thinking about trading it on Monday or Tuesday if it starts moving. ResMed, same idea, consolidating along the 21-day, looking for a follow-through. RSI is above 50 but flat. So kind of lacking momentum in the short term while volume starts to pick up. Service now looks like it's at the top of its current leg up at the third ATR bands. Looking for this to turn back down. RSI pull back. I still like this one a lot. Looks like a cup, potentially a handle forming at this previous breakout level, and then a pullback to breakout and a follow through. Cup and handle obviously is a continuation pattern, looking for higher prices into year end. Simo, we've talked about this one previously. We're looking for a follow through here as well. Next leg up could take it through this previous pivot high. RSI suggests there's more upside. Volume on Friday, though it's sort of a thin traded stock. I like stocks that have at least 250,000 shares or more, as that could lend to higher volatility. The stock could move quite a bit given the low volume that it trades on a daily basis. Picked up a little bit on Friday. Sprouts Farmers Market, there's a couple of those on the IBD 50, food related, showing muscle, nice follow through. I wouldn't chase it up here. I'm looking for a little pullback perhaps. Maybe look at some of the competitors like Kroger and stocks more specifically in the organic foods industry groups, as this one continues to show volume that indicates institutions have been picking up shares. Nice bullish action for the last 8 trading days, just continues to push higher. 9 above the 21 day, and MACD above its signal line and rising. Taiwan Semiconductor, another semiconductor stock that looks like this next wave up could test this pivot high. If it gets through there and RSI starts to rise a little more steeply, we could see a follow through as a function of price, of course. MACD turning, and we got volume starting to pick up a little bit on Friday. Trade desk, we found buyers right at the 9 EMA. 9's above the 21 day. Both are above the 200 day. RSI showing muscle. Keep an eye on this one. It could pull back to the 21 day, but if it does hold up and we start to see muscle on RSI, there's a potential for this to break out. Looks like a big cup pattern, potentially a handle consolidation zone. Volume was way above average on Friday, so maybe this gets a follow through. I know some of you have been mentioning this one in the trading room over the past couple of weeks, so trade it accordingly. Toro, looking for a follow through. Next wave up is already started. Looking for a test of this level. A breakout above these pivots would give you a target of the 200 day. Overhead RSI is pushing through 50, so maybe we see a follow through this week on Toro Company, TTC, as volume continues to increase. TradeWeb's been on the IBD 50 for a few weeks now, continues to follow through. Wave up, could see ATR 3 bands before the next wave down, inevitably. Looking for that. Volume did increase on Friday. MACD turned up back above its signal line, and RSI is rising. Looks like this one's going to follow through on Monday. Trex Company, looking for a follow through as well. Volume increasing. MACD's above its signal line and rising with RSI at 70. Viva Systems just grinding along the 9 EMA. Hasn't touched the 21 day since back here in late March. Probably due for it. If it doesn't and starts to follow through on Monday, this could be a nice trade into midweek. Vertex, watching this one for a test of the 9 EMA. Got very close to it on Thursday and Friday. Looking for a follow through and an increasing volume on a breakout. Could come back a little bit more, maybe the 21 day. It looks like it's consolidating in a range up here. Watch the entire group. Some of the pharmaceuticals pulled back a little bit last week. Looking for a continuation this week. Maybe Bristol Myers Squibb after earnings now continues to rise. J&J. We're looking for continuation in Eli Lilly, among others, which would help propel Vertex higher as well. Workday, looking very strong. Human resources, software related name. This looks pretty good. Volume has been showing institutions have been picking up shares. Looking for a follow through and a test of the 200 day moving average in the short term as it reports earnings at the end of the month after the close. This might get some follow through in anticipation of a positive earnings report, and look for a test of the 200 day on above average volume with MACD above its signal line and rising. Also, you make sure you check out some of the names in the opening monologue down here under Market Smith relative strength. The blue dot scan in cyan and the top volume percent gainers in green, as well as some of the other names that we like Beyond Meat, among others, that are showing strength. A lot of those names showing up, and listed the ones that look the best in the opening monologue. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com on May the 10th, 2020. I'll send out a watch list later tonight around 11:30 as usual, 8:30 on the West Coast. Make sure you check your inbox for that, with a copy always posted in the watch list channel on Slack for ease of use. Take care. I hope this helps, and we'll talk to you soon.